In today's market update, we're going to be taking a look at the S&P 500, in particular the way in which the current 80-day cycle is unfolding and the way in which price is interacting with the 20-day and 40-day FLDs. My name is David Hickson. Today is the 25th of July 2019, and as always, I must ask you to please make sure that you have read and understood these disclaimers. Here is the analysis that we have been looking at in the S&P 500, and in my previous market update last week I spoke about how the 40-day cycle trough had potentially already formed at this point in the second week of July, but how it was also possible that the 40-day cycle trough still lay ahead of us. I spoke about how, even though there was still uncertainty about the position of the 40-day cycle trough, we could be confident that the next interaction with the 20-day FLD would do one of two things. It would either be a short D category trade, in which case price would drop below the 20-day FLD and take us to the 40-day FLD. Now the 20-day FLD is this purple line and the 40-day FLD is this blue line. The other possibility was that the 40-day cycle trough was behind us, as you can see in this analysis on screen at the moment, in which case that would have been an F category interaction. Now, F category interactions provide us with very good short trading opportunities, because that is the point at which price crosses below the 20-day FLD and heads down towards the 80-day cycle trough. There is the nest of lows at the bottom right of the chart for the 80-day cycle trough, showing that we are expecting the next 80-day cycle to form a low point sometime in the mid or late period in August. So, what actually happened? Well, price, as you can see, and let me clear these markings, price came down to the 20-day FLD on Wednesday of last week. At that point, we were still in two minds as to whether this was going to be a D category interaction or an F category interaction. Being uncertain, nevertheless, it was important that price came down to that 20-day FLD. The next day, on the Thursday, price bounced back up again. It looked as if though the FLD was providing support. On the Friday, price dropped down again. Now, if that was a D category interaction, then our expectation was that price should carry to the 40-day FLD. As you can see, here is the weekend in which we have no data, of course, and on the Monday, price found support at the level of the blue 40-day FLD and bounced back up again. Now, that was indeed one of our expectations of what could happen in the market, and the moment that we saw the 40-day FLD providing that support, well, not the moment it provided the support, but probably by the end of day on Monday, we realized that that was probably only a D category interaction. And so any short trades that might have been entered should have been closed out at that point, because clearly this was not turning into an F category interaction. You must remember that each one of these interactions between price and the FLD has its own character, if you like. I speak about the characters of the different category of interactions, and they are all very different, and an F category interaction is usually a good clean cross down below the FLD as price moves with some determination down into this 80-day cycle trough. And so that is clearly not what happened at the end of last week, which means that that was probably only the D category interaction, which means that the 40-day cycle trough potentially only in fact formed at the end of last week, or potentially over the weekend, because of course Hurst cycles exist in time, and it's one of Hurst's fundamental principles that he believed that these cycles continue to influence the price movements of financial markets even when our markets are closed. And so the fact that there is a weekend is important to bear in mind, which is why all the charts in Sentient Traders certainly show these gaps over the weekends because they are important in our cycle analysis. Different cycle approaches take different positions with regard to this, and you will get many cycle approaches that consider trading days as opposed to calendar days. But Hurst, in his original definition of this approach to the markets, specified that all time should be considered, even weekends and non-trading days. So it seems very likely that the 40-day cycle trough formed over the weekend or perhaps on last Friday, and we'll take a look at an analysis in a moment that shows that. But is it still possible that the analysis that I'm showing you on this chart is still valid with the 40-day cycle still sometime in the past, the 40-day cycle trough? Yes, it is absolutely possible, and it's very important to keep our minds open to all these possibilities. Hurst cycles, as I have said many times, is more of an art than a science, in my opinion, although Hurst, in fact, originally said that Hurst cycles analysis is more of an art than a science, and I truly believe that. And it's important to keep our minds open to the different things that might be happening in the markets. So it is certainly possible that the 40-day cycle trough did occur earlier in July, in which case our interactions with the 20-day FLD would be A, and then B over here, and C as price moved away, and then the D category interaction would have been as price moved towards the FLD. And I spoke in an earlier market update about these interactions and explained that an interaction does not necessarily mean the price has to actually cross the FLD or even touch it. The fact that it moves towards it is considered an interaction with that FLD, in which case the E category interaction would have occurred after that. So what happened last week, if that is the situation that we're looking at? Often after an E category interaction, or in fact after any interaction, you will find that sometimes price returns to the FLD, as if though it just wants to test that FLD one more time. And so what happened last week could be described as a retest of the FLD following the E category interaction. Or if we take a look at the different analysis possibility, which is on this chart over here, then here you can see that the 40-day cycle trough is actually still presented as a nest of lows at the foot of the chart, which is centered around the end of last week, making it very likely that the 40-day cycle trough occurred at the end of last week. In which case, and I don't have the correct FLDs on this chart, so let me pop those up, 20-day and 40-day, in which case the 20-day FLD interactions would be A category interaction over here, B category interaction over here as price came down towards the 20-day FLD, revealed its bullishness by not quite touching that FLD, something I spoke about in a previous market update. The C category interaction is where price bounces away from the FLD, and the D category interaction was where price came down and crossed just below that 20-day FLD at the end of last week. So that was the D category interaction according to this analysis. It's a perfectly valid analysis. And where do we expect price to form the 40-day cycle trough? Of course, you know the answer to that because I've discussed it in previous market updates. We expect the 40-day cycle trough to occur at the level of the 40-day cycle FLD, which is pretty much exactly what happened because there is that 40-day cycle FLD. Okay, so that would then be the 40-day cycle trough. So this is now the E category interaction as price crosses back up above the 20-day FLD and heads up towards the peak of the current 80-day cycle. Now, in previous market updates, I've discussed that peak as, or potential levels for that peak as being 30.50, and I think the other one was 30.80. But if you take a look at the previous market updates, I discussed those potential targets for the 80-day cycle, and so price is heading up towards those targets now. So let's discuss in some ways the most important aspect of all of this, which is that we're interpreting the interaction between price and these FLDs constantly in order to determine how bullish is this market, or is it beginning to turn bearish. So as I mentioned at the point of the 20-day cycle trough over here, price didn't reach down to the 20-day FLD, indicating some bullishness in the market. at the level of the D category interaction, we would usually expect price to continue an equal distance beyond that interaction to achieve its target for the D category move. Price didn't do that, revealing yet again some bullishness in the market. Let's look at the interactions with the 40-day cycle FLD. In a previous market update, I spoke about this 40-day cycle target and the fact that it was achieved and indeed exceeded. So that indicated some bullishness in the market. The fact that the market came down to the 40-day cycle FLD at the beginning of this week and found support at that level, at the level of the FLD, indicates not an excess of bullishness, but in fact a fairly balanced, what we would have expected kind of a situation. So there is no indication yet that this market is turning bearish. But because of the fact that we are expecting some big important peaks to form in the market, we are certainly on the lookout for bearishness to start developing in the market. What are we expecting next? Well, you'll find that as we progress through the 80-day cycle, and of course the current 80-day cycle started at the last 80-day cycle trough, which was on the 3rd of June of this year, as we progress through this 80-day cycle, things become clearer. Whereas at the beginning of the cycle, we are looking at the A category interaction, which is often a very nice, clear A category interaction. But identifying the 20-day cycle trough has been a bit of a challenge. Identifying the 40-day cycle trough has equally been a challenge. But once we get past that point, we're sort of past the halfway mark, things become a little easier. Because what is expected to happen now is that the market is moving up towards the peak of the 80-day cycle. We have our targets, and take a look at the previous market updates to remind yourself of those targets. Is price definitely going to reach those targets? Not definitely, no. If price doesn't reach those targets, then it indicates that some bearishness is developing in the market. If price does reach those targets and exceeds those targets, then the bullish nature of the market is still alive and well. But in terms of interactions with the 20-day FLD, which is of course the FLD that we watch most of the time, the next interaction is really clear. There isn't really any more confusion about, is this going to be a D category or an F category? The next interaction with the 20-day FLD is going to be an F category interaction. And so that is an interaction to look out for, because F category interactions provide us with profitable short trading opportunities as price comes down into this 80-day cycle trough. But now let's turn our attention to the 80-day cycle trough. Let me point out what has happened to this 80-day cycle trough at the foot of this chart. It is leaning over very much. It's sort of leaning backwards, as if though there's a steam train driving along the foot of the chart and at high speed, and its smokestack is leaning over backwards. And that is an indication that the shorter cycles have been running longer than expected. And if you take a look at these bar counts and you subtract the positions of the various possible positions of the 40-day cycle, you will see that indeed the 40-day cycle and the 20-day cycle, as discussed in previous updates, has potentially been running fairly long, longer than the average length of those cycles. And that is what happens when the shorter cycles start running longer, is that this nest of lows starts squeezing itself off to the side like that. So this tells us that we are expecting the 80-day cycle trough sometime from about the middle of August, and in fact it could occur as late as the first week of September. So that is our expected time frame for the next 80-day cycle trough to occur. The F category interaction with the 20-day FLD should give us a good short trading opportunity, but we need to keep an eye on the bullishness of this market. If the market remains bullish, then we need to be careful with entering a short trade as always. If the market is bullish, then short trades, potentially you need to be very quick, you need to be very nimble getting in and out of them. F category short trades are usually profitable unless the market is very bullish. The market certainly is still bullish as of this moment, but we are looking for those bearish signs. Now, there is one other thing that I would like to show you to wrap up today's market update, and that is the 80-day FLD, because we've been looking at all of the other FLDs, of course. So let's take a look at that 80-day FLD and discuss our expectations in terms of how price will interact with that 80-day FLD, because I know that many of you might be saying, well, we expect price to come down to the 80-day FLD as it forms that 80-day cycle trough. That may or may not be true, because of the different position that we are in terms of the sequence of interactions. So let's take a look. So the sequence of interactions with the 80-day FLD has to start at this 18-month cycle trough on Christmas Eve of last year. That was a trough of at least 18-month magnitude, and so the A category interaction with the 80-day FLD occurred over here, and we reached that target as discussed in a previous market update video. Price came down towards the 80-day FLD at the beginning of March of this year. It didn't reach the 80-day FLD, as you can see, at the time of the first 80-day cycle trough following this 18-month cycle trough at the end of last year. That was a sign of bullishness, as I have discussed in previous market updates. That was the B category interaction. The C category interaction was where price bounced up and away from the 80-day FLD. The D category interaction was where price came down and crossed below the 80-day FLD on its way down to the 20-week cycle trough, which occurred over here on the 3rd of June. The E category interaction was this interaction here, where price crossed up above the 80-day FLD. So the next interaction with the 80-day FLD is not a B category interaction, which is what we have been looking at in terms of the 20-day FLD and the 40-day FLD on its way, on the market's way out of its 20-week cycle trough on the 3rd of June, but we are looking at an F category interaction with the 80-day FLD. So yes, it is quite possible that the next 80-day cycle trough might indeed form at the level of the 80-day FLD. But when price interacts with that FLD, you must bear in mind that it is a bearish interaction that we are expecting when price will cross below this 80-day FLD on its way down to the next 40-week cycle trough, the circle of which we can see over here. I do hope that you found today's market update interesting. Please let me know if you have any questions in the comments below this video, or send us an email. I always look forward to hearing from you.